Hey everybody, this is Jose Blasco. How are you, everyone? We're about to start in just 15 seconds. This is a sound check. Please go ahead and give me a quick confirmation of the chat box if you hear my voice. A quick hello would do, so I know that you hear me and we are ready to go. So just waiting for your confirmation, guys. Everything is looking good on my end, but again, I want to make sure you guys are properly connected with me and it's all good technology-wise. Very nice, wonderful. Thank you so much, Ruben. Good to see you, my friend. Let me go ahead and maximize the introduction slide so we can start the session properly. I will also turn on the camera so I can be part of the session with you as well in a visual manner. How are you, everybody? Nice to see you all. Today is January 22nd, 2020. We are getting together to look at longer-term opportunities in the market. We're going to be exploring the world of directional trading, also non-directional trading. We'll be looking at the charts, assessing what's available. And as I always say, if the opportunities meet our rules, we will execute them. If they don't, then we'll keep researching until we find them. And that's the plan, and that's the job of a trader. So be ready to work with me as a team, meaning that there may be times I may be looking at certain market data. I may ask you questions. Please go ahead and work with me on answers. There may be times where you have questions, so please make sure you phrase any question you may have. Don't leave anything unanswered, because in this case, I will be the one giving you the answers. And that's what I mean by teamwork. And also execution-wise, the moment I have the trades identified and they are ready to be executed, I will certainly put them in my account on my end, and you are certainly welcome to do the same and basically follow me on the execution. Of course, the size of the trades, as well as the fact that you may be using real capital or using paper money, that would be a decision that you would make yourself, and the consequences of it, of course, also would be yours. But certainly, I will be detailed when it comes to all the parameters. So if your wish is to mimic my action in the marketplace, you can certainly simply follow me. Okay. Very nice. So disclaimer before we go. So the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And that's it. That's the introduction. And here is the beautiful TradeStation with all the tools we need to do what we need to do in our trading. Okay, so talking about tools, my initial focus is going to be here the scanner. Okay, in just a sec, you're going to see me click on any of those directional setups, directional long, directional short. But apart from directional, you will also see me click on the credit opportunities. Okay, where those are non-directional, even though the ones that are pure non-directional is the one on the top. I'll start from here, the ones on the top, because the two below really more than non-directional, they are neutral long, neutral short, which is a form of not being directional, but is not that non-directional, so we call it neutral. Okay, so we're gonna be doing that in today's session. Okay, quick look at the S&P and the VIX as well. Okay, S&P just keep pushing higher since the beginning of the year, 0.21% up today. So certainly a powerful market. And I have to say, though, that from a premium point of view, when we look at the VIX, okay, and we look at the premium for the options, we have the options, basically trading down in that bottom end of premium levels, which is 12 point something. And this is not the best news as possible when it comes to doing credit trades where we sell options, because basically that means that options are quite low price. Actually, when I went to run my scan for non-directional trades, my scan came up with two options, which is Caterpillar and Disney. So very few stocks at this moment in time are meeting the rules that we need to do pure non-directional trades. And one of the reasons is certainly the fact that premiums are so low. The other reason is also that given the fact that the market is pushing so hard to the upside, and we know, by the way, I'm going to rerun the scan just to see if the scan can pick up some other trade. What I was saying that given the fact that the market is pushing so hard to the upside, and we know that stocks are directly depending on the index, the stocks are very influenced, heavily influenced by the market. I always say stocks are fragile, meaning exactly that point. So what happens is that most stocks are actually moving up strongly as well. Not only the S&P is moving strongly, but many stocks are moving strongly. Actually, you can even say it backwards, which is the S&P is made of stocks. So for the S&P to move strong up, it means many stocks are moving strong up. In other words, we have few setups which are stocks positioned in ways to trade horizontally, which is what we need for non-directional. And on top of that, the premiums are not high, they are on the low side. So the two things together basically return only two opportunities, when we looked at the scanner. So I'm rerunning it right now to see if some stock, has been moving in a certain direction and it's nicely providing an additional opportunity or something. We'll take a look, because of course the scanner is looking at current data, and this could be the case. So we'll look at that when the scanner is done, and we'll hopefully we'll have more opportunities so we can take great advantage of today. Okay, comment here, GWAC. How are you, GWAC? In simulated trading on TradeStation, after both legs of my iron contract expire, I did not see the final position of my trade. It still showed up as a queued and on-field order. Yes, and you're right. This is something to be known about TradeStation. When we do simulated trade with TradeStation, there are a few characteristics of the simulated account of TradeStation, which I could certainly understand the reasons for it, but from a practice point of view, sometimes it's not ideal. Okay, so for example, when you use the simulated account to trade options on TradeStation, and let's say you want to place an order to buy an option, and instead of using a market price, you want to use a limit price, where you specify the price you want. there will be times where you get filled and there will be times where you don't get filled. So in other words, maybe in the real world you would have got filled, but in the simulated account you would not. So the way to really guarantee your fills on the simulated account with TradeStation would be to use market orders, and that puts you at a disadvantage. And that's one of the problems, if you wish, of using simulated trading for options with TradeStation. Other brokers, they will just keep it simple. The moment you do market order, they will give you the midpoint between the bid and the ask, which is not realistic because now this puts you at an advantage. It's like you trade options simulated in other brokers, and next thing you know, you feel you're doing well, and then when you trade live, the results are poorer. So I kind of like it better how TradeStation does it, in the sense that it's like training with weights. Okay, so it's a good one, but sometimes it has this undesired result with the market orders, and the other undesired result sometimes also happens to be when certain legs expire. Okay, when certain legs expire, that they may be removed or they may not be removed from the account, and then even maybe you try to remove them manually and you could not. So that what I would say there is that that's obviously not ideal, but what I would like to say as well is that our job as traders, when we execute a trade, is to log it. So my recommendation would be that you log your trades, and when you enter, so you get all that information in a spreadsheet, and then when you get to an expiration date, you know that the options that are out of the money are going to be zero, and the options that are going to be in the money, they will have the intrinsic value, which is basically the vertical distance from the closing price on Friday to the strike of the option. So if the option is 100 and the closing price on Friday was 105, so you have $5 of intrinsic value. So then you could update those values in your spreadsheet, and then you would know for sure in a proper way what the outcome of the trade was. And this, of course, is a little tedious and it's not ideal, but at the same time, it's basically impossible to simulate an options market in a demo account, and that's why some brokers just go for the midpoint all the time, and you always get filled in the midpoint, which is not realistic. And TradeStation try to do something more realistic, but then sometimes it's not good enough because again, options are a pretty complex asset. Sometimes you see the bid price and the ask price very far away from each other, and really you would expect to get very bad prices, but actually you get very good prices and other things, So so that's what we have, and that's what it is. Okay. Anyway, Serge, how are you? Good to have you with us, Serge. Dirk, late to the party. Well, late is better than never, isn't it? Pansy, how are you, Pansy? Hey, Pansy, did you take that trade with a Swiss franc yesterday? Because the trade already reached the target. So I'm wondering if, when you asked me to demonstrate it, you also executed the trade, because that would have been a great example and a great practice for you. Okay, so let's go back. Okay, and by the way, notice how the scanner is returning again the same stocks, Caterpillar and Disney. Okay, so hey, that's what it is. We're gonna work with this, and I'm gonna start looking at those particular markets, and therefore I am now turning on my browser, because the first thing that needs to come to our mind when we look at an option which is high price, the first thing that needs to come to our mind is, why is it high price? Okay, so in that sense, I am bringing, okay, here we go. Okay, I'm just having a little bit of a delay with the dragging. So I'm bringing here Yahoo Finance, okay? Because with Yahoo Finance, I'm gonna be able to input symbols. In this case, we're gonna look at Caterpillars and Disney, and this is gonna be able to confirm if those trades, if those stocks are close to reporting earnings or not. Okay, and notice how in this case the earnings for Caterpillar is on January 31st. Now, when looking at the calendar, today is January 22nd. The next expiration date is on the 24th, and the next one is the 31st, which is when earnings are reported. Okay, so problem, we cannot use 31st of January as an expiration, because then the earnings would take place prior to the expiration. And remember, earnings many times imply large gaps. Okay, large gaps. And large gaps, if in the case of a non-directional trade, is exactly what you want to avoid. So in the case of Caterpillar, I'm going to be very happy to look at the chart, but only and keeping in mind that the expiration date I will be using is the 24th January, and certainly not the 31st. Okay, so good news is that those two stocks that we have in the list, they are $100+ per share, and in that sense, we may have some. We may have some decent amount of premium because the premium in the options derive from the underlying asset. Okay, and so hopefully being a not super high price point, but it's not a cheap stock. So hopefully we have something decent to be traded. Okay, well, in the 55-minute time frame, using a regular session data, we get UFO stats of 46.5%, and this is certainly not enough. So I'm going to move to pre and post market and see what we got. And here we got 53%, and that is certainly a good one. Okay, now, yeah, this is going to be very difficult to make it work. Okay, let me explain why. So I'm going to load the option chain. Okay, unfortunately, the chart setup is not providing us with what a proper setup would be. Okay, so that's the issue. But let me explain that by loading Option Station Pro, so you will get to see that much better. Okay. Yeah, my pleasure, Pansy. Absolutely. That, as I said yesterday, I should do that more often. Charles, oh, you took the trade and you were on the trade. Wonderful, wonderful, good job, and hopefully a good eye opener as well. That's my purpose when we get together in these sessions. That beyond the educational value they could have for you, I'm thinking more than thinking knowledge or knowing more stuff. I'm thinking about the practice aspect of it, and therefore the development of skill on your end. That's what I'm thinking the most about. Okay, so CAT Caterpillar. So when I load Caterpillar, okay, you can see that 31st of January carries an implied volatility of 38%, is the highest number of all the volatilities. Why? Because earnings are built in that date. Okay, but again, we cannot use that one, so we need to use the 24th of January, which is not going to be enough premium in my mind because of the following. Remember, when we do non-directional trades, we always use at least 2 UFOs in each side. Well, already I have a problem not seeing red UFOs above, which I can always look higher, but it's going to be above 150. And if I look at the UFOs below, we are talking about this one, which is 133.69. So 133.69 would have me, if looking at the options chain, selling the 134 or the 133, and notice how this would only pay me 2 cents, which is not acceptable. Okay, not acceptable, because we do have a set of rules. Let me bring them to the main screen, so that way everybody is focused on the rules. Even though many of you have seen that millions of times, isn't it? And you know them by heart. But for the ones of you that may not be part of the sessions that often, I want to make sure everybody sees it. Okay, and here it is. Here's the rule, which is that we don't like to sell options for less than 35 cents per share. Okay, in this case, as you saw, we are being provided like 2 cents per share. That is certainly too little. It's disappointing. It's not enough. Okay, so we're gonna have to look at something else. Okay, and something else is going to be Disney, which is the other stock we had in the list. And again, before we get too excited as well, I need to do the same type of confirmation. Look at the earning dates for DIS, Disney, and see when that is going to be the case. In this case, notice that here we do have a little more flexibility. Actually, the date is quite convenient. Let's see if the chart's set up too. But here we are talking about February 3 is the next earning, and that will allow us to use the January 31st expiration, because February something happens after January 31st. Okay, so we are fine with that one. Also, stats, we got 53% here. Okay, that is good. And if we were to look at regular session, 53 becomes 53. It's fine. So that looks good to me as well. And we do have multiple UFOs above, and we have multiple UFOs below. So I would say it's looking good. Actually, this statistic is still not fully calculated. You can see PD on the upper left. So we're just gonna wait 1 sec. This should be done quickly. Here we go. In the end, it was 52, but again, it's okay. We're gonna stick with this one, given the fact that when we do non-directional trading, we just want to see stats. We don't even need 50%. I mean, we like to see 50%, but for non-directional trading, given the additional benefit of time decay when selling options, we are okay with 48% and above. Okay, so 52 is certainly above 52 is above 48, so that is valid. So what do we do at that moment in time? Well, we're just gonna input DIS in the option chain and switch the expiration date to not to be January 24, but we're gonna use January 31st. Okay, 31st. And again, in order to not to spend much time doing analysis and then we get a no, if that was to be the case, okay. So I'm gonna be looking at the 151 call because it's my second UFO, right? So 151 call. Let's see how much I get paid for the 151 call. I don't have 151, I have 152 and a half, and that is unfortunate. That would be 14, which is under. Okay, it's under 35. So we are not enjoying enough premium in that particular expiration date. And I was a little concerned before expanding this expiration date because I was looking right and I noticed that the one that ended up with the earnings, which is February 7, it has 30% implied volatility, but the one I was using here has basically half of 18. I mean, it's a little more than half, but kind of like half. So I was expecting those options to not to pay that much, unfortunately, and that's the case. Okay, so from a pure non-directional trading point of view, not too happy to say, but that's what the market is giving us today. We are basically done for today. There is no other opportunity. There's kind of return two symbols, and while I look at other trades, I'll click run again. We can always come back later and see if an opportunity form, but I would say it's going to be unlikely. So I'm going to be focusing on other trades. Okay. Cool. So let's continue. Okay. Notice as well, the directional trades have a very similar problem compared to the non-directional trades. Okay. Most of the stocks are just pushing, and therefore the scanners are not suggesting that it's time to look at any trade as of yet. Okay. And therefore the amount of symbols available are not that great. But anyway, what we have is what we have. So we're going to have to work with this. And therefore, I'm going to start looking at Morgan Stanley. I will skip IYR because that's an ETF. It's a real estate ETF. So I'll focus on Morgan Stanley first, okay, a $56 stock. Okay, so we will load that one. And we will look at the climate. The moment it's loaded, the first thing we're going to do is look at the climate to see if we have a directional opportunity or not. Okay, and in this case, notice that we are using candle number 9, where statistics would suggest that this type of climate, an up climate that we have confirmed with a thick blue dot, that climate should last by 8 candles, and today it's candle number 9. So we are now crossing the line from a normal market condition to a little bit of a stretched market condition. The rule that we have in place is that we look at this value, we round it up. Okay, rounding it up means that it's going to be 8, correct? And once you see the value as 8, okay, we're gonna take 50% of 8, okay, which 50% of 8 is 4, and then we're gonna make this to be 12. So in other words, we're gonna give ourselves the opportunity to take trades here all the way to 12, and 9 is certainly happening prior to 12. So we're gonna give it a chance, okay? We're gonna give it a chance from a climate point of view, okay? Now, of course, for us to be directional, we also need a requirement when it comes to UFO stats, which is at least 50%. And here, when looking at regular session, we don't get that. So what happens with the pre-post market? With pre-post market, we do get that. We got 51%, so that's fine, okay? Good. So we're gonna go for it. We are exceeding number 8 by 1 candle, okay? So it's still okay to trade from 9 to 12, but of course, we will be utilizing half of the position size, so keep that in mind. And with 51%, we can certainly think about planning a trade, okay? Now, next step would be to look at the average. The average is pointing at 54.66. That would be somewhere around here. And what's the issue with that? Well, the issue is that there's no UFO at this price level. The UFO is located at 55. Okay, so we don't have what we need, which is a direct force UFOs combined with an indirect force moving average We don't have that, and therefore the setup is not valid. So I'm going to move to the next one, which is BHC. Okay. Okay, so climate point of view, that's a nice one. Okay, climate is looking good. We have 4 candles into the climate in climates that should be out of 10 candles. Okay, so this is quite early in the move, so that's looking good. Now 41%, it's certainly not looking good. So let's see if we change this to regular session and we get confirmation, and we do. So 53%, that's the performance stats that we got. That is decent. Okay, and then when it comes to the UFOs and the average, okay, so I think we do have an opportunity here. So we got the average pointing at 2934, okay, and 2934, it's falling more or less around here. The top of that UFO, to be precise, is how much? Is 29.26. Okay, so just a few cents away from 34. Also, if the stock drops from 29.65, which is the current price, to 29.26, well, certainly the average will go down by a little bit. And also with stocks, we don't need to be that precise because stocks are fragile. Okay, so in other words, we do have a setup here, at least for entry. I need to go ahead and check on the stop. Let me rephrase that. I need to check on the target. Okay, so let's plan for this properly, and let me do a little bit of a reset just to have an orderly conversation with you guys, so you follow the process properly. So first, the stock is meeting our criteria. That's why it's in the scanner. Second, when looking at the climate is telling us that we are not late to the party. This is 4 out of 10, so it's a good moment for us to enter the trade. Third, we do have UFOs lining up with the moving average. Okay, so all of this confirms that we have a valid entry. So the only thing we need is to find where the target would be, and that will be done by activating AutoUFOs. Okay, and when doing so, let me maximize. Let's see what we get. Okay, so it seems that I get no AutoUFOs. Let me look at the monthly time frame. This may be a stock making all times high. Actually, it's not making all times highs at all. So there should be on-field orders around 2015. So I'm going to go back to daily, and I'm going to load data until 2015. So I'm changing the settings here to load data from, for example, September 15. That may be good enough. Okay. Here we go, thinking. So we're just gonna wait. Here we go. And when loading all this data, basically we just uncovered that there is a UFO located at, let me make a note. That UFO is located at 3225. So 3225 is the UFO that we're gonna use as a target, as an exit. Okay, that's the UFO that we're gonna use for our trade. Okay, so I'm just going back to the normal amount of bars to minimize processing power on my computer. Okay, so define climate, everything is good, and the target is 32.25. Okay, so current price is 29.65. Entry would be that UFO located at 29.26. Okay, so good. So let's do some typing here. So the plan of the trade would be final target is 32.25. The entry, which is a long entry, would be 29.26. Okay, because we're going to use options, and the most you can lose when you buy options is what you pay for the options. Okay, then I'm not going to use stops in that particular case, and I'm just going to take the risk, which is the cost of the trade. Okay, now for me to be able to evaluate all of this, I need to decide the expiration date to be picked. And for me to evaluate the expiration date to be picked, I need to run my TTT calculation, TTT meaning time to target. So what am I going to do? How am I going to do that? I'm just going to bring a calculator. I'm going to look at the distance between entry to target, which is 32.25 minus 29.26. That difference is $2.99. And when I look at this value compared to the average true range of that stock in a daily time frame, average true range, so that is, we can see it here. Okay, so not sure why it's not bringing me. Okay, it's down there. Okay, got it. So I'm just gonna, okay, this should do. Oh, it's not doing it. Why is that? Right axis. Yeah. Oh, okay. I understand what happened. Okay, so I got, basically I got my ATR in the wrong place. So ATR, I want to have my ATR in subgraph number 3. Okay, that was the problem. Okay, got it. Perfect. So now I should be able to have this properly set up with the scaling to be automatic. That's it. Got it. Sorry for that one. Okay, I made a little mistake there. But anyway, so what do we have? 0.6836. Okay, that is the ATR. So if I look at the distance from entry to target, which is 2.99, and I divide it by the ATR, which is 0.6836, so that tells me 4.37. Okay, and normally we give 1 full week of time, which is 7 days, for a daily ATR to be produced. That's the rule we use. So 4.37 times 7, that means that we need at least 31 days to get to the target. Okay, so the initial TTT, okay, is 31 days. But I call it initial because we need to look at the final TTT, which has a lot to do also with the earnings date in case earnings were going to be reported at any of those times. So I'm going to look at the earning dates, BHC. Here we go. Actually, nothing to show. Okay, so I'd like to ask for a little bit of teamwork there on your end. This happens sometimes with free websites, which is the case of Yahoo Finance. So anyone out there who is using a broker such as Thinkorswim, for example, where you get to see earning dates on the screen, would you guys mind to share with me what is the earning dates that you get? Can you guys tell me? February 19. Okay, February 19. Thank you so much, Jiwok. So I just wanted to avoid to have to launch another platform. So thanks, appreciate that. So BHC. So when I look at February 19, which the nearest we got is February 21st, okay? This is providing us with 30 days, okay? 30 days. We need a minimum, okay? We need a minimum of 31. So you could say, okay, I'm gonna use 37, okay? And that would do, okay? That would be absolutely fine, okay? Now, the fact that we're using February 28 expiration for this trade, okay, and by the way, let me have a quick confirmation here because I may suggest to use February 21st. Yes, we're going to use February 21st, okay? Here's why. When you look at February 28, okay, this would meet the rule perfectly, right? Because we need 31 days or more, and that's 37. But when you look at that, you got the bid price is 110, the ask price is 116, so we got 6 cents of spread. Where if you look at the 21 of February, you may say, okay, you're breaking the rule for 1 day. Yes, you're right. But now the spread is only 2 cents. Okay, so basically the time decay that you would have with 7 extra days is probably going to be like those 6 cents or something like that. So I'm thinking that if I do 21 of February, I'm going to have 2 benefits, which is less slippage. Another benefit is going to be less cost for the trade. Less cost means less risk. And then the last benefit I'm going to get is that earnings being on the 19th of February, that's going to make February 21st to be the most sensitive expiration date when it comes to increase of value for the options given earnings approaching. And with all of this, that justifies my peak being February 21st. Okay, so let's go back to the chart. Let's go back to the chart. And basically, final TDT is going to be 30 days. Okay, it's going to be February 21st, 2020. Okay, which by the way is a monthly expiration date, not a weekly. And that's the reason why I was expecting better liquidity as well. Okay. So what are we going to do? Well, we are going to be building a bull call spread. We're going to be selling options. Okay, we're going to be selling options. Okay, which the options we're going to sell are going to be calls. Okay, and that's going to be beyond the target location. And then we're going to buy calls. We're going to buy options, which are going to be calls. And this is going to be located between entry and target. Okay, that's what we're going to do. Okay, so what I'm going to do is I'm going to put those writings here on the side, so you know what I'm going to do. Okay, but I'm going to restart writing here on the right the very specific options that we're going to use, the very specific expiration date, etc. So later we can just put this trade in the market and execute it. Okay, so we're going to sell calls. Okay, the target is 32.25. So I would say if I got a 32.5 or maybe the 33 call, that would be the one to be sold. And then I'm going to be buying options. Okay, I'm going to be buying calls. I'm going to be buying calls in between entry and target. And this may be, I don't know, I'm just guessing that one. I'm going to adjust everything in a minute, but it's going to be the 30 call maybe. That's going to be the one. And as we said, February 21, 2020, that's going to be the expiration date. Okay, so this is the initial unconfirmed plan for this trade. So how do we get to be specific and concrete and confirm the plan? Well, first I'm going to look at the call side using February 21st, and I'm going to right click anywhere to analyze and buy a vertical. Okay, we are building a bull call spread. Bull call spread belong to the group vertical spreads, and therefore that's what we're going to build. The care search. So here we go. So I just click vertical spread, and this moved me to my analysis tab where I got everything I need here. And actually I even got too much, okay? Because really I only need 2 price slices, one for my entry, which is 29.26, and one for my target, which is 32.25. Okay, so I got this, and then from an adjustment point of view. So again, do I have the 32.5? Yes, I do have 32.5, and I do have 30. So you know what? Let's begin with 32.5 for the one that I sell. Okay, that's beyond the target. Okay, sell, red color, -1. And then for the one I buy, I was proposing 30. Okay, let's begin there, because all of these then will need to be adjusted. Okay, and I may have got it right in the first place, maybe not. So let's see where are we at. Okay, cool. So now, what are we looking for? Well, the moment I got my strikes in what looks like follow the rules that I wrote on the chart, the first thing I'm gonna do is look at the delta, but not any delta. I'm gonna have to look at the delta when looking at my entry price. And that delta happens to be 27. And that is not good, because the rule that we have is that we need an initial delta to be closer to 30, ideally 30. So 27 is not going to work for us. So one way to deal with this would be to move my target strike further away. So instead of 32.5, I can then push it to 33. Okay, and if I push it to 33, well, notice what just happened. Now I do have a delta of 30 where the entry is. So it seems that 33.30 does a good job when it comes to creating the delta I need at entry. And also, of course, because it's a debit spread, it's a no-brainer. We're going to have positive gamma at the entry too, which is the second rule we need. Once we got the delta of 30, then we want to make sure the gamma is positive, okay, at entry. That's automatic. The one that is not automatic is the one at target, okay? Notice in this case, our gamma is negative. That is not what we're looking for. We would want that gamma to be positive as well. So how can we accomplish that? Well, we could accomplish that by moving our the call that we sell a little further out, okay, maybe 34, okay. Gamma is -2 now. Maybe I can also rise this to 31 because now I got 35 delta, so it's too much. So if I rise it to 31, that was too little. 30.5. Now it's kind of 28 point something. So maybe if I move this to 34 and a half or 35, maybe it will do it. And yes, it does. So if I do 30.5 and 34 and a half, so what's happening now is that I got my 30 delta, I got my positive gamma and positive gamma at target as well. So this particular combination makes sense. Okay, this particular combination makes sense. And if I was to pick up this particular combination, I would be dealing with a trade where the cost of the trade at the moment of the entry would be around $56, and that would be the risk. You would pay $56 for the spread, and if you were to be wrong on the trade, then the most you will lose is $56. Okay, so that's a valid combination. But at the same time, I am concerned about one thing, especially because this is a stock which is not very high price point. It's like $30 stock. So I'm wondering how much the 34.5 call is being selling for. And it's selling for 10 cents. So really, I'm getting only 10 cents from that call. So I would like to do another analysis, which is what if I simply buy a single call? Okay, I just buy a single call and that's it. Well, if I buy a single call, okay, let me compress and uncheck the vertical. If I buy a single call and I buy the 31.5, for example, that one will give me a delta of 23, which is too little. If I buy the 30.5, that one gives me a delta of 35, which is too more. So if I do 31, I am more or less in the same place. Okay, just a little less, but more or less in the same place. But now, if I do this one, I would enjoy a gamma of 12.5 and 11.8. So in other words, the efficiency of this trade seems to be better to me. And also the cost, instead of $56, the cost of the trade would be 46.85 only. So this trade, in my mind, looks better. Instead of doing 30.5, 34, my proposal for this trade would be to buy the 30.5 call only. How can that be possible? Wait a minute. Yeah, I'm not sure why it shows here 30.5, because really the call I have selected clearly is the 31. So I think we just discovered a little tiny bug somewhere in the system. Okay, so it's make sure you understand it's the 31 call. Okay, so proposal to you: buy the 31 call. We're not gonna do a spread in this case. Just buy the 31 call. That's it. Okay. Now buy the 31 call. Not now. Buy the 31 call only if that stock falls and falls and falls and reach to the UFOs. Now you buy the 31 call and then you ride the move until 32.25. Okay, that's the plan for this trade. That's what we're gonna do. Okay, so let me then readjust everything here, because of course we are not gonna be selling calls in this case. With stocks at a higher price point, it could make sense. In this particular case, it does not. So we're gonna buy the 31 call when the BHC reaches $26 per share. Okay, so that is the plan that is now way more accurate. So I'll give you just 1 sec for you to take a screenshot, and I will then move into executing this trade. So I have it in, you see how I do it, and then if you want to replicate that, you'll see how it's done. So just a few seconds, I'll have a sip. And you may hear a little bit of firecrackers and explosions, and it just happens to be that we are celebrating Chinese New Year. So we're having a lot of this, and believe me, it's very, very loud and it's everywhere, which is very cool. So anyway, let's go for it. We are going to execute trade. I'm going to go market price with an activation rule, which says, hey, if BHC happens to drop to equal or less than 29.26, then please activate this order. And that's why it's called an activation rule. So this rule will activate the order, and that order will be to buy one of the 31 call at market price. And I'm going to make this to be a day order only. So if we don't get filled today, you can come back tomorrow and review this particular trade. Okay, so I'm going to place the order. Okay, quick review here. Buying one of the 21 of February 31 call. Market price, all of this is good. Day expiration, day duration, I should say, and activation rule. The price of the stock BHC is less or equal than 29.26. Yes or no? Yes. 1, 2, 3. That's it. The order is in the system. So now if I move to manage and I get to see, all the orders that I got there. So you can see I got a trade received. Okay, this trade here has been received. BHC, and is waiting. It's in waiting mode, as received. Okay, I'd like to get a little bit of confirmation from you guys. How is it going so far? Were you able to follow this plan properly? Everything is good? Curious to check while you guys are responding if we got more non-directional trades in the last time I run the scan. Now, again, the same Caterpillar and Disney. So yeah, so that's what we have today from a non-directional point of view. Order is in there, very good. Pansy, very good. Love it. Super appreciated that you guys share your feedback. And again, sometimes, it's kind of like you kind of not think about it, because, you are following, so it's all good. But really on my end, it's very appreciated, not only to know when you need responses and you have questions, but also if everything is good, it's also very important for me to know. So thanks for that. Anyway, so BBBY, I'm just going to pass on it if that's okay. It's a $15 stock. So nothing wrong with looking at it, but at the same time, you would probably need a huge amount of contracts in order to be able to have a decent profit. And so if we were to find trades where you need less contracts, basically you are saving yourself a ton of commissions, and that would be a better way to do it. Okay, even though commissions are not an issue nowadays any longer, but still slippage is an issue, and the more contracts you use, the more slippage you get. Ruben, I will place the trade later. I have to restart the computer later. TradeStation not working properly, but looks good. The trade, got it. Perfect. Mark, what about entering the closing order when the target is reached? Entering the closing order when the target is reached. When the target is reached or when the entry is reached? You mean the entry, right? Let's do this because I'm just waiting. Can you share how you enter the activation rule? Yes. The order has to be filled first. Okay, so let's do this. Since today there are not that many opportunities out there, and we just found one that, as Ruben said, it just looks good. It meets our rules. So let me do this. First, let me re-explain one more time how I did it. Okay, so we decided to use 31. Okay, we decided to use 31 of 21 of February as the expiration date. Okay, and once I got my trade here, for me to execute a trade, I just went here, clicked on trade. Okay, and the moment I click on trade, I was presented with this menu, and what I changed here in the menu was, first, the duration. I made it day only. Second, the order type, I made it market. Okay. Third, I went to the activation rule. Now, once you check market, is not enough. You also need to click on the button with the little 3 dots, and that gives you a pop-up window where you can now specify the price of the stock for the activation. So the price, and then you will input the symbol of the stock, okay, add, and then less than or equal to 29, 20, 20 26. That was the value. And then you will just click OK. Okay, the moment you click OK, the pop-up goes away. Okay, and the only thing that's left is that you got the check mark here on the activation rule. So now when you click place order in your final confirmation window, notice how you have the activation rule here pointing right here. Okay, you see it here? Right there. So yeah, so GWAC, this is how you would do it, okay? But also thinking about what Mark was suggesting, okay? I would like to show you a more advanced way on how to place the order. It's gonna be a little more complex, okay? It's gonna be just a little more complex, but it's okay. I think we can do it, isn't it? Let's do it. Because now what I'm gonna enter is not only the entry, I will also enter the target all together in one order, okay? Kind of like when we trade Forex or futures, we do bracket orders. So kind of like that, but with options. So for me to be able to do that, the one thing I need is to right click and copy the symbol. Okay. Every option got a symbol, and the symbols are very lengthy. Okay. So if I show you columns here and I show you the symbol, okay, it's a very long thing that if you were to type manually, your probability of making mistakes is way too high. Okay. Okay, well, I'm not sure why I cannot expand it at the moment in time. But anyway, it's many letters, many digits, and it's a little bit of a pain. Okay, so the way to deal with symbols is just forget about the symbols, and when you need to use a symbol to place an order, just right click and copy the symbol. Okay, that's how you avoid human errors. Okay, now once you copy the symbol, you will then go into your trade station, and instead of placing the order from the Option Station Pro, you would just place the order from the trade order bar. Of course, you have to click Options. And this, where it's empty, that's where you're going to right click and paste to enter the symbol we just copied. Okay, the BHC 2020, 21, 2022, 21, C31. That's a long one. Okay. So what are you gonna do? Well, you would select the quantity. I'm gonna go with 1, okay? And what you would do here is instead of inputting everything in here, what you're gonna do is go for an OCO OSO order. And again, this is quite advanced, and it's gonna be a little complex, a little confusing if it's the first time that you have seen it. But good news, this video is being recorded on YouTube, isn't it? So you can later on go back and replay it and watch it carefully with no rush, and you'll be able to do that yourself. So I'm gonna click on OCO OSO, scroll down to custom OCO OSO order. And when I do that, okay, I'm gonna have a blank space, okay, a blank template here to place my order, okay? So again, in this cell, I'm gonna have to input the symbol. So right click, paste, okay? So right click, paste. Okay, I got a symbol. And the moment I got a symbol, okay, now I'm gonna have to be very careful with everything I do. First, I got buy to open, one quantity. Price comes with limit, okay? For now, I'll make it market, okay? Even though I'll show you a little nice thing in a second. Now, for this particular price, for me to buy, I would want it to be day only, meaning if I don't get filled during the day, I'm done with the trade. Okay, and for this particular instruction to buy the call, I also need an activation rule, which, as you can see, is right down below. So same as we did before, click on the button with the 3 dots. I'm gonna check mark price. So this allows me to type BHC, which is the stock. I'm gonna add, and then select, just like I did before, less than or equal to 29.26. So if I do that and I click OK, okay, let me shrink everything a little bit. Okay, so notice what just happened here on the right part of my screen. Okay, I got an activation rule to buy BHC only if, to buy buy to open the 31 call, sorry for that, but only if BHC happens to be less or less than less than or equal to 29.26. Okay. Now, up to this point, if I click send order, this is the complex version of doing the same thing I did before. It's the very, very same thing. There is no difference at all. The only difference is the way on how I input it. Okay. But what's the beauty? And that's the reason why I got to use this other screen. Well, that now here I have a button here which is attach single order as OSO. So what is OSO? What does OSO means as an acronym? It means order sends order. Order sends order. In other words, if my primary order gets filled, which we call it the parent order, then it will send in the market a child order. But if the primary order is not filled, then no order will be sent. So if I click attach single order as OSO, notice that I get another row with the same symbol, but I got an indent. Okay, the indent is telling me that the below row is a child order depending on the upper order being filled or not. So in other words, what do I want that second row to be? Well, that's the one I want for a mark purpose, which is sell to close. I'm gonna sell to close the 31 call, okay? That I don't want it to expire. I'm gonna make it good till cancel, because if the first one is filled during the day, I'm in a trade. So I want my order to close, to be alive until I close. So I don't want it to expire. So I'm gonna make it good till cancel. And I also have an activation rule for the closing of the trade, right? Which is my final target being greater than or equal to 32.25. So if I click OK now, notice how I got one rule for the entry, 29.26, one rule for the exit, 32.25. One is greater than, the other one is lesser than. The closing order is good till cancel. The entry order is there only. And they're both using one contract. One is to buy, one is to sell, one is to open, one is to close. And they are both using the same 31 call, same quantity, and both are market orders. So if I place an order now, okay, I will have entry and stop. Sorry, let me rephrase that. No stop here. Entry and target sent all in one shot. I don't need to then do anything manually. Both orders are in the system, in one shot. So take a look. I'm gonna go back to the manage tab before, where I got my BHC order here. Okay, and what I'm gonna do here is I'm just gonna cancel the order. Okay, so that's it. I got no order anymore. I just cancel it. Okay, and now that I just canceled the order, what I'm gonna do is I'm gonna send this order out there, and you will see how instead of one row, it's gonna be two rows, which is my entry order and my exit order, my open order, my close order. Okay, so everything is done in one step. One last thing I would like to add here, and I understand this is more complex than normal. Okay, so if I'm adding too much, I'd say I'm sorry about it, but that's at the same time, my intention is that you get the best prices when you trade. So there is one thing we can do to make this just a little better. Okay, and take a look. So if I look at the add the money option right now, okay, or wait a minute, we are gonna be so it doesn't matter. So what is the spread? The spread is like 2 cents. Okay, the spread is 2 cents. In other words, if I execute with market, I will suffer 2 cents. So I would like to try to shave a little bit. For me to shave, I need to use a limit price. Okay, but how do I know the limit price that will be available at the time of the trade? Well, I don't know. I don't have a crystal ball. So what can you do? You can use the function shave. Okay, and if you tell TradeStation limit shave 1 cent, what will happen is that the moment BHC gets to 29.26, then it will place an order to buy the 31 call, but instead of placing it at the market price, whatever price that is, it's going to be looking at what is the available price now, and it's going to place an order to buy at that price minus 1 cent. So we are shaving 1 cent of price in this particular trade. Okay, which is certainly a little bit of an improvement. And then for the exit, well, you know what? We can do the same, but at the same time, I don't want to miss the exit. So let's leave it as market, and that's it. Giving up a little bit of profit is fine, but on the entry, I do want to be as precise as possible. So if you guys followed all this process, which I understand, maybe I went a little too far today. And by the way, today is not a sharpening session, so I really stretched it a little bit here. But again, good entry prices is always something valid and valuable, isn't it? So if you followed, now would be the time to click send order. Okay, if I went too fast, please utilize again the YouTube session, watch it again, and you'll see how it goes. So I'm gonna click send order. Okay, 1, 2, 3. And the moment I click send order, I'm getting now a confirmation for the whole thing. It says, hey, you're buying to open one of the February 31 call with an order to shave 1 cent. This is a day order that will only be activated if price goes down below or equal than 29.26. And if that's the case, then another order will be sent to sell, to close. That one will be good deal cancel, and that one will be market price, but only activated if we reach the target at 32.25. So you have the whole thing here built in. And now if I click yes, that's it. Before I click yes, one last confirmation, one last comment, which is if the parent order was not getting filled today, and it's a day order and therefore expires, guess what? The child order will expire as well, because the child order depends on the parent. If the parent is gone, then the child is gone. If the parent gets filled, then the child order is active in the market. Okay? Only if the parent is filled. That's what it means. Order sends order OSO. Okay? So I'm gonna click yes, 1, 2, 3, yes. So the order has been sent. And now if I go back to the Manage tab, I guess you can see here under Received, you can see that I have, received and queued. Okay, so I got the order waiting to get filled with BHC, and under queued, I got the child order waiting to sell to close. Okay, notice the gray color, meaning that this order is depending on something else. So that order has not been sent at all. Okay, it's just dormant until it's being woken up by the parent. Cool. Okay. What do we have? Great tips. I use this type of orders. Nice one, Ruben. Okay, Mark, was this what you were asking for? Hopefully, I didn't go the route of all that explanation, and maybe you were asking something slightly more, easier or different. So hopefully, this is what you wanted to know. Okay, everybody. Anyway, I'm looking at the clock. We are reaching the top of the hour, so I think that we're gonna call it a day. Okay, today it's really a day with very few opportunities to go long. We found one. We have it. Very few opportunities to go short. Okay, and also very few opportunities to do non-directional trading. Okay, so one of those days, which by the way, it's been happening a little bit from time to time, and it's given the current market condition is what it is. Okay, and this is when patience play a very, very important role in trading. You guys stick to the plan. Don't lose your patience. Okay, not trading. It's also trading. And remember, our job is to say no more often than yes. So if you don't have a trade that is, meeting your rules, okay, it's part of trading, and therefore you just discard it with a happy smile on your face. It's part of trading. Don't get frustrated. Don't lose your patience. Okay, that would be a dangerous recipe. Okay. Very good. Thank you very much, Pansy and Mark. Yeah, this is what you needed. Perfect. Okay, so I'm glad I did cover those little execution tips. Anyway, everybody, my super pleasure to have you with me here. Thank you for coming. It's always a pleasure, and I will see you again in the following week in the live sessions in YouTube. Get together, and in the meantime, for the ones of you that are also with me in the Forex class that we're doing this week, I will see you tomorrow, 9 a.m. Eastern time. You guys take care. See you. Bye-bye.